All right, good morning. It's 6:30 a.m. on Wall Street, about 3 hours before the open of trading. It's time to get your global macro on, where we uncover the best fundamental opportunities out there in the world to make it the money. My name is Wayne. Look, this is what an economist looks like. There's one. Cool. Right on. Studied economics, macroeconomics in particular. Cool. Love it. Yeah. Great. Yeah. Several of my professors, probably 2 or 3 of my professors actually worked at the Fed. Yeah. Cool. Anyways, look, I love all this stuff. When we look at the markets, I want to know yields, I want to know energy, I want to know metals, I want to know the stock market, I want to know the euro dollar and Bitcoin and correlate them and risk, sentiment, all of that kind of stuff. QuantBox does it automatically. It's incredible because what you're trying to do is match up seasonal trends with technical trends. Oh, well, that makes sense. To understand all that, you need to know the position of institutional and traders, right? Institutional traders, and the flow of that capital week in and week out. You want to know what the central banks are thinking. Well, how do you know what a central bank is thinking? You log into their databases and you pull the data out of their future assessment. The data is there, and you can represent it graphically, where the central banks have told you interest rates might be in the future, what the central banks told you inflation and interest rates will be in the future. The information's just out there. It's out there. You don't need to guess anymore. And then real-time sentiment on 3 different time frames. QuantBox does all of that. It looks at volatility, it looks at yields, it looks at the dollar, it looks at the yen, it looks at gold, it looks at S&P 500 on 3 different time frames, creates baskets, analyzes whether they're risk on or risk off based on the actual flow of capital, and then gives you like, hey, maybe you should think about being bullish on Aussie or Euro or CAD today. Hey, maybe you should think about being bearish on the dollar or yen this month. Oh my God. Okay, so it does a lot of things. It automates a lot of things, and you know it's beautiful. But ultimately, for $80 a month, you can get some confidence in your trading. Test drive it, YouTubers. By the way, YouTubers, you're watching it way, 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 way late. Kick down, come clean. Don't be a holdout machine. QuantBox.co, sign up. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay. Oh, a quick update. We are like a couple of days, maybe, away from testing the new AI alert service. Ho, 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 wee. So I expect it to not work. So don't get too excited, right? If you get excited, you know it's going to be broken. So anyways, we'll see. It all comes out in Chinese. You're like, oh, anyways. So anyways, we'll see. But we're there. Like the developers are like, yeah. Okay. So anyways, I'm looking forward to that. Oh, and there's still an opportunity for you guys to sign up if you want. Never miss a fundamental opportunity. Never miss a bias change again. Never miss a technical change again. Have AI write a COT report for you. Can do everything but wash your car. Yeah. Cool. All right, so that's happening, dude. That's seriously happening. Cool. Great. So it's only taken what, 2.5 weeks of full-time development? Yeah. Yeah. Holy smokes. So anyways, coolio. Okay, yields are still doing fine. They're great. below 4.2, a dream. Thank you. Oil has collapsed below our line in the sand. I actually took a shot on it yesterday. I must, right? I can't deny it. I took a little shot on it yesterday, and it worked really well for an hour or two. And now I'm out. I'm out. And like I showed yesterday, it's a long ways down. So, anyways, I got sucked in. I got suckered in. All right. What else going on? Most of the stock markets are flattening out. You're like, wait, I can't see. All right, hang on. All right. Okay. You see the Japanese stock market flattening out. S&P 500 holding. Okay, Dow holding. Cool. FTSE doing okay, but look how low FTSE is relative to the rest of the world. Okay, obviously a giant lag. Hey, plus 3.56 is better than negative 3.56. So, anyways, good for them. There was a recovery. Look, it was a bit low. And then, of course, down in here, this is where the dip is. And then, by the way, if you're going to use QuantBox, look at seasonality and check out what QuantBox was telling you about potential buying opportunities in the stock markets. This March area, okay, was a potential buy based on seasonality. And this late September, October period is a buy. Now, in this year, it started to move up. Then we had, right, the attack by Hamas on Israel. So by the time Monday opened up, it collapsed down. It was lots of geopolitical risk. And then we got over it. Only last a couple of weeks. And then, boom, game on again. So I'm suggesting it all worked as expected. Also, I made a big stink about Canada Day, which is right here as being the potential top of the market. Okay. All right. Like QuantBox worked, right? QuantBox worked. Remember, I went over that in January for the entire year of 2023, and it hasn't been horribly wrong by any means. And in many cases, it's my predictions were quite right. Quite right. Right. Quite right. Yeah. And still neutral. Still neutral. We rallied to basically all-time highs, whatever you're watching, gold, stock market, whatever. We rallied up to tops, and then the market went cold, huh? The thing is, this is where retail traders lose most of their money. Trading like crazy when nothing's happening. It's showing you that some markets are coming down, and I covered this yesterday and the day before and last week. What's happening is some assets are falling, but that money just goes into a different asset. From growth into defensive. And they're going to sit tight for a while, and then they're going to buy growth back. So the risk profiles don't change. But it's easy to be a retail trader and just trade the same thing every day. Whatever worked last month, you're going to do this month. And that's not necessarily true. And you can see by using QuantBox properly, you can see the reality of the opportunity in front of you. If you're awesome, if you're excellent, you probably won't make any money. That's the reality of what we're looking at. And if you're like an okay trader, you're probably going to lose money. So are you looking for something to do because you're bored? Or are you trying to make money as a trader and investor? Well, look at the facts. You should be you should be cautious and conservative. Bitcoin's still Oscar Mike. Incredible. Awesome. It's dipped a little bit, which is nice. I'm hoping to get a little dip on it. Take out that crypto. Wait, am I frozen? Am I frozen? What? Frozen. Am I frozen? Wow. All right. All right. I guess I need to reboot my machine. Okay. Let me expand this again. Let's close that. Get rid of crypto, but add these. Yeah. Okay. So let's zoom in. We have to take out the outliers. And then you get the Japanese stock market. Oh my God. Yeah. Holy smokes. Hmm. Has anyone been tracking Japanese news flow in regards to monetary policy and interest rates and yield curve control? Has anyone actually taken up my advice and spend significantly more time doing the research? Yeah, good. Not much about yield curve control, I imagine, but you're probably hearing normalization of interest rates, jacking interest rates all the way back to zero. Okay. Yeah. Yeah, Boris. That's what we're looking for, huh? Jacking up interest rates all the way to zero. Okay. So, anyways, cool. But look at that opportunity. Huge, right? It's QuantBox has it slightly bearish, but it's very bullish today. 2% rally. Ooh, are we going to have a 2% move today in the US stock market? We're going to have what, a low number on ADP? I don't know. I don't know about that. I don't know about that. 5.9% GDP. Oh, but people are losing their jobs. I don't know. Right? Yeah. No. Do, 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 do. Do, 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 do. So let's get rid of the indices. Everything else is coiled. Oops, no, I want commodities. Coiled like a snake. Now zooming in here, everything else is quite flat. So we got an outlier on Nikkei, an outlier on Bitcoin. Everything else is neutral, and we see that in the risk gauges. Neither here nor there. Remember, we're looking for trend. So you could say like up here, 1/3 is bullish and expected, 1/3 is bearish but unexpected, and then you have bearish or bullish but unexpected. So good news that's unexpected, good news that is expected, and bad news that wasn't expected. And then oil's way down, right? Like, oh my God. So what's the trend? Uh-huh. So sometimes it's hard to see it. So that's why we do this. Okay. Mark says, should we go play golf or go shopping or something? Yeah, I work when I'm not trading, I work, and my work is revolved around my trading. So I either do research and stuff, but like I got really frustrated like with the CIA group I started. I want to show my portfolio and I want to manage the portfolio with this group of traders. But my strategy or my money management philosophy, because it's based on like an endowment type strategy, it's very strange. Like wealth managers don't do this type of strategy. Therefore, I went through many, many, many tools, spending hundreds and hundreds of dollars, and I can't find a tool that just shows a chart, let's say, of all the stock in my portfolio going up and down, plus the income I earn, and then be able to put it on a chart to show the portfolio's total return. all the asset appreciation or depreciation plus all the income, and they just don't really show it, and it's frustrating, right? And I went through many, and there were some services I thought would do it, but it's so weird that just nobody cares about income or dividends. I don't know why. So we're building it. So I hired a crew. We're just going to build it. So, anyways, going back to your question, Mark, you can you can go golfing, or you can build tools to help you become a better trader. To each his own, right? So that's what I'm doing. So I can't wait to see that. Possibly by next week, I should be able to visually show you the portfolio. Yeah, the way I want to. Yeah. All right. So anyway, but what you don't want to do is just force your trades because you think you're supposed to be trading every day. No, you're supposed to be making money. There's a big difference. People get lost in that. You think you're a trader and you got to trade every day. No, you're supposed to make money. So right now, holy smokes, all the money's going to Bitcoin. German DAX at an all-time high now. Okay, Dow is up, FTSE's up, Nikkei, S&P 500, and do I have NASI? Okay, so this is what we talked about days ago, and it's become even more clear. So let me highlight something just to make an educational point. NASDAQ is essentially flat for the week. S&P 500 is up just ever so slightly. So this is slightly down, this is slightly up. And Dow is up significantly. Now, when you analyze the beta of these assets, it goes Dow is the lowest, S&P is next, and then NASI, right? NASDAQ. Okay, this is value. This is mix, so balanced. And this is growth. And the Dow should be up the least, followed by a balance of different types of stocks, the balance being the S&P 500, and it's statistically flat for 7 days. And Dow is actually down. But the market hasn't crashed. What's going on? Money left here and went here. Okay, money, some of the money, let's say all the growth investments in the S&P 500 switched over to value. And the same amount of money was in the market, but what it invested in has changed. And in the stock trading course that I'm doing, we specifically talk about this, and this is called rotation. You are witnessing it. It's a defensive play by hedge funds and money managers doing their job. So, yeah, okay, NASDAQ might just skyrocket tomorrow 2% and have a giant day. But the money's got to come from somewhere. And is that likely? Well, there's the Santa Claus rally thing. But you should really look at QuantBox seasonality and say, well, when does NASDAQ go up? Is it in the next 3 weeks, or is it in the next 3 months, or somewhat of a combination? And then what strategy would you like to employ in the future? But if your strategy is wait for NASDAQ to pop 2% and then get interested in doing something, you're not doing it right. You're not in control. You're reactive. So you got to be careful. So where could you get that kind of information? Uh-huh. Okay. Yep. So I'm not going to do it for you. You'll have to do it for yourself. but I'll show you where to get the information if you care to know. So like we could do, well, here's the NAS since I brought that up. Load in, load in, load in. It's a lot of data. I don't think it did it though, did it? It did do it. All right. All right. So this is the shape of the NASDAQ. The gray is what actually happened this year. Unusual year, huh? Like it followed the relative shape quite well, but it rallied quite a bit relative to normal years, huh? It was a normal year, but it was an extraordinary year. Which means if it ever wanted to come down, it's heavy. It's overbought. You can think like it could fall all the way down to this level and then rise next year, right? You could see like it could, like let's say, let's go with this. Where are these numbers? All right, so like we could say, if it's up 25%, it could drop 12.5% and just get back to the normal rate of change. So you could have a 12% decline early in the year and then go on with a normal shape. Yeah. But of course, I added this upgrade at no additional cost to you. I added this NASDAQ weekly. And look what we roll into. Little profit taking Santa Claus rally. There it is. That's actually it. So this is where you go to Google. Hey, Google, week of the year. And it's week 49. Profit taking. Oh, snap. It's good to know, right? The next 3 weeks is probably not up for NASDAQ. How are you going to use that information? Now, it can be up, but on average, the next 3 weeks are more often down than up. Money rotating, huh? Yeah. Now, this is week by week, and it's hard to visualize how this creates a shape of a market. So I did this where I add them up. So starting at 0, bullish, bullish, slightly less bullish, very bullish with some profit taking, bullish, bullish, still somewhat bullish, some profit taking. So you can see profit taking started at the top and worked its way down, troughs out, and then up, and then troughs out, and then up and down. See, the big spikes always follow with profit taking. Still bullish, but a lot less bullish. Okay. So, anyways, then you get a shape of the NASDAQ over the years by adding up all the bullish positions, subtracting away the bearish positions, and you get a shape. Okay. Which means these dips could be buying opportunities. That's how you're supposed to be using QuantBox. You can say, okay, we're somewhere over the next 3 or 4 weeks, we are in a trough, and then we're going to have a 1, 2, 3, 4, 5, 6 week rally. So somewhere in week 39, 40, and 41, we should look to buy. Now, this year, I made a big stink about week 41, week 41, week 41, week 41. And despite Hamas and all that, eventually it did take off. But this is the normal shape. Okay. This is the shape of the market. Week 11, week 12, maybe somewhere in here, we should be buyers again. That's March. Okay. That's March. Okay. Here, Then we have this shape of around week 36. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, So now we have 2 or 3 months of decline. And somewhere around week 40, week 41, week 42, you want to get long again. And well, it was delayed this year because of geopolitical risk in the Middle East, but it did do it. It was delayed a couple of weeks. Stop crying. We're taking 20 years of data to show you normality. Doesn't mean this year's normal, but it's good to know. I mean, people, I talked to, I mean, I had dinner with financial advisors last night, but I talked to those who should know, and they don't know this. You would think they would know. They don't know. So if you have this tool and you start to understand the shape of the market, when you should be a bull and when you should not be a bull, I'm not even saying being a bear, just when you should accumulate and then when you should not accumulate. Knowing that in advance already puts you in the top, I don't know, 5%. Got to be top 5 in the entire world of asset managers. Okay. The people I had dinner with last night manage hundreds and hundreds and hundreds and hundreds of millions of dollars. They don't know this. Yeah. So anyways, let's go take a look at the markets. Everybody needs some pretty colors in their life. And this is the one that got me. I will share with you what I tried. And it was sort of like a binary option type trade, right? Or just not a binary option, a binary trade, such as an option, where it either works or it ain't going to work none. And I outlined this months ago, in fact, that this is a bottom. Okay. So this could be a bottom. And I am concerned that we don't have enough supply of oil in inventory. We're living off of everything we're producing. So if we stop producing, we're screwed. Okay. Or if suddenly we need more for whatever reason, we're screwed. So I'm like, okay, look, 72.5, I see it as a bottom. I'm allowed to do 2 things: buy double bottoms or buy higher lows after a double bottom. And double bottoms are aggressive because you're making a bunch of assumptions. So I played the double bottom play yesterday. Okay. Not the first touch, of course. So let's zoom in. What did I do? And you can decide if I did it right or wrong. Okay, we had the lower low and then the immediate, okay, resumption. Cool. So I bought this dip. I even have it there. You see the line? I actually drew this. Okay. And my trade plan was, okay, was the recovery. So, right, accumulation, I thought maybe. And I thought maybe this would work. I know it's aggressive trade. I know. I get it. I get it. At least I'm telling you. I mean, okay. But it's an aggressive trade. And every once in a while, I make aggressive trades. Every once in a while, you try for a home run. You want to win the game. And it worked for 4 hours. And now it ain't none. So, so now when we go out to a 4-hour or a daily, let's say, my gourd, the next line that I have is like 66 to 65. Oh Lord, that's a long ways down. Okay, well, I still think, and maybe to my detriment, but I think there's risk out there of very high oil prices someday. I just don't know when. But I see vulnerability. The fact that we literally don't have oil in storage, I think, is a problem. It's like you make $10,000 a month and your bills are $10,000 a month. You're not saving, you're surviving. That's where we are now. We're producing more oil. The United States is producing more oil than ever in the history of the United States of America. That's a lot of oil, by the way. That is a lot of oil. Okay. Like we hear of all these OPEC countries, like the United States produces more oil in 2 hours than Libya produces all year. Like it's incredible. I don't know if that's quite true, but it's dramatic. Let's say the United States produces more oil in one day than Libya produces an entire month. That's probably closer to truth. Okay. So it's a big deal. The problem is we have none in storage. We don't have anything in Cushing, Oklahoma, and that's like just the giant barrels, if you will, the giant tanks. The tanks are so empty that they're at the level where if you drain them anymore, they break. So they're literally as empty as they can be. And then the Strategic Petroleum Reserve, we've drained it to the point where the caves will collapse because there's nothing holding them up anymore. We have the United States has no oil. So just think about it. We're producing an amazing amount, 2 million barrels a day, but we have no backup plan, no backup strategy. If anything goes wrong, and it could be weather related, it could be geopolitical, it could be OPEC related, it could be terrorism, just like anything. And we're in serious trouble fast. Okay. So, anyways, that scares me. And so I watch this with that in mind. I look at this asset that the only way, if something goes wrong and this market goes bad, the only thing you could possibly do is hedge by buying it. Make money when everyone else is losing money. You got to buy the asset. So if gasoline prices go up 20, 30, 40%, right? And you'll have the sob story. I used to fill my Porsche for $80 and now it's $109, right? Well, then you laugh. Well, I'm crushing it on WTI, right? Yeah, that's how you do it. That's how you have to hedge it. And so I'm sitting here like, that was an aggressive trade. I'm on daily now, so it looks stupid, but whatever. I will wait for the next drop and the next reversal, and then I try it. Okay, you see what I mean? Like, let it fall. Like, if it's going to go all the way down to 65, I can see that. Do I want to sell it? I don't know. I got other things to do. I could sell it. But if it heads down to 65 and then it double bottoms, I might get myself into a frustrating situation like this, but I could filter that out with like a 4-hour 5A cross and then get north. And how, right? So I'll buy it. I'll risk, let's say, $1.50, and my target will be up forever. $1,000 a barrel, because it's my giant hedge. Anyways. Oh, I'm in gold. Forgot about that one. Look, I'm in gold, everybody. Interesting on the weekly. Oh, I didn't want to manage this today. Anyways, entry on gold. I'll remove half the risk. Why not? All right. So not bullish yet. And if I don't want this, right? Forget that. I want more money. All right, cool. Cool. So yeah. I don't remember the basis of this one. Why did I buy this? I don't remember. I was on weekly. Maybe I was doing a weekly trade. Well, okay. Let's try to figure out what I was doing. Resistance, 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 support. It's like support, and you have to make sort of a weird face, I guess, right? Okay. Um, we had that spike, that again, geopolitical news. Oh, I know what I did because my stop was down here. I know what I did. All right, now I remember. I played the spike, I played the vol, and what I did is I bought it on the weekly 5, and I have a stop below last week's low, with the idea of that it just kind of does this maybe. It'll take months, let's say, to get back to that spike. We kind of do this for a while, or it does this, in which I lose hardly anything. Okay. So I'm playing the spike. Is it a good trade? It's just a trade. Stop being so judgy. All right. So there's kind of this thing going on, you see? Low. So this is the higher low, higher high, higher low. It's not the dumbest trade in the world. And this is an old high and a previous old high and a previous before that old high. So this could be the new higher low. All right. Whatever. What if? Okay. And on a weekly candle, it's not that big, right? It looks like I got it at 2010. Now we're at 2020. Sweet. Okay, so neither here nor there. Big things to be watching today, of course, is the stock market. This is flat because it's balanced. Okay, sometimes you want balance, sometimes you don't. Apparently, people don't want balance right now, or because it is balanced, nothing's happening. Yeah, I guess that makes more sense. Where you go from higher risk to low risk, you're moving from NASI to Dow. And at some point, Dow back to NASI. And you have to figure that out. Maybe week 10. Remember, QuantBox can show you maybe the better time to get ready for that next rotation. Okay. No, you went as QuantBox will show, maybe there's a big year-end rally. Cool. And retail traders might just chase that up and then find it collapses in January. So anyways, we're caught in the range here, huh? Not even going for a target yet. So what do we got today? Well, what I hope, if you don't mind me hoping here, is at least back to the top of the range. So maybe that's ADP at 815 today. Okay. A volatile news scalping type event. One of the things I'm researching is a calendar that does spike analysis. Um, and so I had conversation and they're like, well, it's complicated. I'm like, I know it's complicated. That's why you want me to buy it. Right. So I get it. So they can do some spike analysis, but they're like, you know what? I mean, that's good, but we have to do the math over here and then do the math over there. And then but we have a different math over on this that we can put on the calendar. And it's kind of interesting. So let me know what you think about this if I was able to just buy this calendar and bring it in. They're like, well, what we have in the calendar is that we look at and analyze the last whatever million of the ADPs, let's say. Okay. And we think there's a 72.3% chance it falls. Whatever happens today, whatever the number is, the euro dollar is going to fall. 72% chance. And you're like, wait, what? And it's just like, we don't know how far or how fast, but down. You're like, really? Yeah, we've looked at hundreds of these things, and fuzzy math, fuzzy math, magic, guess. It's almost certainly going to fall. And you're like, well, I believe it's something like, right? Jessica's like, hey, daily seasonality, but it's specifically the news event because it's not the day. They're analyzing. Um, I forget the specifics, but just as an example, the hour before the news, and then 3 hours, let's say, after the news of ADP reports. And if you looked at all of them over the years, they're just like, there's a 72% chance it's going to fall. What's going to happen today? Nobody knows, but 72% of the time, euro dollar falls, or stock market comes down, or whatever the number. Okay. So they're like, we're not predicting the number, but 72% of the time, this asset falls in this time period. And you're like, Okay. Well, no, but then there's other things. There's spike analysis. There's other things going on. And what they're saying is there's different maths going on. And that's one of them. Right. So, anyways, it's interesting. It's really interesting. La, 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 la. All right. So there's the commodities. Okay. Watch your rotations today. Bitcoin's interesting. I mean, there's not much more that I can say than show it. We are at the R3. That's usually, let me say it again, usually in an extreme, unusual moment when you happen to be at R3, which in of itself is unusual. But the usual thing in this unusual time is that R3 is the most effective place to take profit. Now, that's technically. Now, the money going on here is bets on all the new ETFs that are coming out. Suddenly, Bitcoin's interesting again. I can argue it's been interesting for a while. We had this all lined up. We measured the range, we measured the trend, we measured the breakout, okay? And then we've measured the new bullish trend. And now we're already, boom, at the most unusual extreme bullish profit target for Bitcoin for the month of December. I'm not saying down, but what I teach is that this is an extreme level of possible profit taking. I have a Bitcoin on the way. So that's my issue. So I'm worried about when to get paid this Bitcoin that somebody owes me. And my worry is they send it to me at 44,000. And by the time it clears, we're at 41,000. So that's my concern. So I have a reverse concern. Why not? Okay. So, yeah, I have a reverse concern. Is it overbought? And what I teach is this is a price if you happen to be there. A plausible strategy is always take profit. And on the long run, if you are in this situation 1,000 times, some of the time it will come down. Once in a while, it will continue going up. But on the average, if you just get out here, what happens is you get the average price, but you've reduced your risk. You give up the opportunity, but you remove the risk. And over 1,000 situations like this, you end up making the same amount of money on average. Okay. And so you're like, so you're going to get what you would say is um, instead of saying average, you'd say the expected return of your Bitcoin. Okay. So your expected return of your Bitcoin position, you get minus, okay, risk on each one of those 1,000 times. You're removing risk and getting the same return. So it's better. Okay. And so that's my other concern too. Like nothing here says bearish, but oh my gosh, does it scream take profit? But this is not a technical move. This is a fundamental move. So, anyways, so that's the day as I see it. ADP coming out. Okay. ADP coming out. And what the market wants is a slightly lower number. We want to see the job market slowing, but not crashing. Okay. Well, technically, the wording to that would be not the euro dollar is going to drop 70% chance. It would be worded more like of the last 180, whatever the number is, ADP results, euro dollar has dropped 70% of the time. It's like it's real information. Okay. Okay. Yeah. So it's just it's an interesting number. It's an interesting number, and you can use it in many ways. One of them would be like, let's pretend this is euro dollar, and let's say that tool I buy or develop, one way or the other, you either buy it or make it, right? Build it or buy it. Let's say I buy a tool like that, and it says 70% of the time the euro dollar drops in this situation. News comes out, and let again pretend this is euro dollar, right? Um, and you have a spike drop as expected, a pullback. Could you sell here? Yeah, sure. Now you're doing the high volatility event driven strategy with analysis of price action post this event going back years to get let's say a probability, if you will. That probability is too strong, but a normal distribution of these price and time data points. And you're like, well, very often it does this, so then it does this, so then you set it up properly and technically, and then you take the next short on the pullback. Yeah. But would you just say, well, ADP 70% of the time it's bearish, sell? No. No, of course not. No. You don't sell it because of the tool. You just say, good to know, 70% of the time it has fallen. So if it does fall, I might put together a tactical strategy for scalping the volatility on this event. Yeah. But to do it would be stupid. Just to do it blindly would be dumb. And of course, we know most people do that. That's why I try to provide education and not just say up or down. Yeah. Cool. Anyways, but I like the historical data. It's a good to know. And if and think about it this way, Jessica. If it gave a newer trader confidence in that situation to stay with the trade a little longer or to prepare for one bias or another. then it's doing its job, right? Even if it's sort of a fallacious, confidence, if it makes you sit around waiting for a sell, and then a sell opportunity presents itself, and then they take this trade, it was training wheels, it was a crutch, and it may not be the right way to do it, but it's pushing you in the right direction to make the decision, set up the strategy, wait for the trade, take the trade, manage the trade, stay with the trade. And if it pushes you in that direction, I'm all for it. Right? So anyways, good to know. There's some other stuff though that they'll show you that which is much more powerful than that. So but that was one where they're like, so on the calendar it just shows like red arrow. And I'm like, what's this? Because I don't like green arrows, red arrows. I really don't. So I'm like, what is that? And they're like, oh, well, and they explain it the way I just explained it to you. Like, it's not predicting the outcome, it's just telling you what usually happens. Oh, okay. Well, if it would have to be worded properly and it would have to be explained properly. But I would like to know, what does this news event do? Like, it's just math. If it's a high probability, I would probably like to know. So, okay, explain me the math. Okay. And the developers are always like that. They're like, really? You want to know the math behind it? Uh-huh. Look at this. Supermodel? Uh-huh. And then I pull off the mask. And now I'm a mathematician. Yeah, give me the stats. So anyways, got to run, babe. That was real. Peace on earth. May the pips be with you. May your profits be above average. Have a good one.